Hi, this is John Persinos, Editorial Director of Investing Daily, with a video presentation for Wednesday, December 15. To view our full range of publications and trading services, visit our website at investingdaily.com. Also visit the website of our subsidiary, streetauthority.com. Well, we got some startling news on Tuesday. Elon Musk, CEO and founder of electric vehicle maker Tesla, said his company will accept Dogecoin as payment for merchandise on a test basis. The cryptocurrency Dogecoin was launched in 2013 as a parody of Bitcoin. Doge is Japanese slang for dog. Dogecoin tokens feature the image of a Shiba Inu dog, an internet meme. Dogecoin has no mainstream commercial applications. It's used for tipping online. Interest in Dogecoin grew through social media. On Tuesday, Dogecoin's value exceeded $25 billion. That's not a typo for an altcoin that started as a joke. Something is wrong here. We'll get to that in a minute. Musk, whose face graces the latest issue of Time magazine as 2021 Person of the Year, is an outspoken cryptocurrency fan. His tweets have the power to dramatically move crypto and the broader markets sharply up and down. Wall Street is perpetually preoccupied with the antics of Elon Musk, who is currently worth about $297 billion. That's not a typo either, which makes him the wealthiest person on the planet. That distinction earns you a lot of media coverage. The financial media love to tout celebrity CEOs. Accordingly, Musk's latest moves concerning cryptocurrency are generating considerable buzz. Let's dig beneath the hype and see what it means for individual investors. The financial markets are awash in liquidity, thanks to unprecedented fiscal and monetary stimulus. Investors have been eager to put that cash to work. Perhaps too eager. We're seeing a rush into exotic and sometimes toxic assets driven by the fear of missing out, aka FOMO, F-O-M-O. Rampant speculation often indicates a market top, especially when stocks seesaw on mere rumors. When assets are rising only because they have risen, the greater fools are setting themselves up for a fall. The number of cryptocurrency millionaires is on the rise. Some are teenagers. They play video games in McMansions. They wear bejeweled Bitcoin tokens as cufflinks. Conditions are bullish for the long term, but as the economy reopens and vaccine rates accelerate, the frothy stock market remains vulnerable to quick sell-offs due to a host of risks that include hotter than expected inflation and Federal Reserve tapering. A lot of fawning media coverage has been devoted to cryptocurrencies, in large part because they make for a colorful narrative. However, this asset class, which typically is volatile anyway, has been on a roller coaster lately after China cracked down on crypto mining. On September 24, China announced a blanket ban on all cryptocurrency transactions and mining. The autocrats in Beijing prefer to keep a tight rein on the country's financial markets, and cryptocurrency poses too much of a wild card for regulators. Question is, has Bitcoin reached unsustainable heights? Bitcoin has risen from $5,000 per token at the end of 2018 to about $47,000 as of December 14, down 18% from its price of about $57,000 on December 3. Bitcoin could resume its upward trajectory, but history tells us that an investment's dizzying exponential rise is usually followed by a soul-crushing collapse. Unless you live in a cave, you know that Bitcoin is a virtual, decentralized currency that circumvents government regulation. Bitcoin's adherents aim to make it a universal electronic currency. Bitcoin is the pioneer and best known among thousands of cryptocurrency alternatives that include major competitors Ethereum and Litecoin. Bitcoin is both a digital currency and a payment system. It's often compared to gold as a store of value that provides a crisis hedge. To get Bitcoins, you must first set up a digital wallet. A digital wallet is an app that stores many of the financial items you'd carry in a conventional physical wallet, but electronically. You then pay a willing seller the necessary hard currency to transfer the coins into that wallet. Bitcoin was invented in 2008 by one or more computer programmers using the pseudonym Satoshi Nakamoto, identity still unknown. A growing number and variety of U.S. merchants are starting to accept Bitcoins as payment, which dovetails with the overall trend toward cashless mobile payment systems. Tesla announced earlier this year that it had bought $1.5 billion worth of Bitcoin. Musk also said that his company would start accepting Bitcoin as a payment method for its products to achieve, quote, more flexibility to further diversify and maximize returns on our cash. Tesla was the first automaker to accept cryptocurrency. The news sent Bitcoin's value soaring, although it has since pulled back. Musk has gone back and forth as to whether his company would accept Bitcoin. At one point, he withdrew that acceptance based on environmental concerns due to the enormous amounts of energy crypto mining consumes. Musk has since embraced Bitcoin again. Adherents of cryptocurrency praise its anonymity, transaction speed, versatility, and security. Critics of Bitcoin and all other cryptocurrencies say it lacks intrinsic value. They have value only because people agree that it has value. What's more, governments could decide to ban cryptocurrencies, as China recently did, to protect their own traditional fiat currencies. Cryptocurrencies are born via initial coin offerings, ICOs. There's a new ICO almost daily. An ICO is a form of crowdfunding. CoinMarketCap lists about 1,400 types of cryptocurrencies in circulation. If you're risk adverse and Bitcoin and its altcoin counterparts seem too volatile and dangerous for you, consider investing in the crypto craze via blockchains. They represent a picks and shovels play on the trend. Every cryptocurrency is supposed to be linked to a blockchain, which is a distributed computer-generated database of all transactions that have ever taken place in the currency. Every time a crypto token is used, a record of the transaction gets added to an existing database that is distributed to all major miners or creators of the database. These miners generally have very large computers that use highly sophisticated algorithms to add transactions to the blockchain. The same miners use even more sophisticated algorithms to create new tokens. There is a finite amount of Bitcoin, of which roughly 90% already has been, quote, mined, i.e. issued. But my main point is, blockchains have a multitude of real-world commercial uses, and as such, they represent a dynamic growth area within the technology sector. The lightning-fast computing power of blockchains makes them useful for many tasks unrelated to crypto, notably those performed within the Internet of Things. According to research group Statista, worldwide spending on blockchain solutions is expected to grow from $1.5 billion in 2018 to an estimated $14.4 billion by 2023. Take a look at the following chart. Blockchains have the potential to add to the growth of many established tech companies, especially chip makers and systems integrators. Are there any topics, e.g. cryptocurrency, that you'd like us to cover more often or in greater depth at Investing Daily? Drop me a line and please let me know at mailbag@investingdaily.com. In the meantime, are you looking for a trading methodology that withstands these unknowns and provides big gains regardless of the roller coaster action of fad investments? Click the URL you see on your screen for details. Well, that's it for now. Thanks for watching. Stay invested and please stay safe out there.